From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for May 23rd, 2016. I hope you had a great weekend and are ready to get started with trading for this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading. And I'm going to highlight some of the key levels that we're going to watch for entry and exit opportunities. The news calendar for the first couple of days of this week is relatively quiet. There are a few things to watch for, but we do have some events later in the week that could spur on some more significant movement, and you'll want to make note of those on your financial calendars. Let's get started here on the USDCHF, the US dollar versus the Swiss Franc. Starting on the daily time frame, we've been studying this downtrend channel for quite a long time, several weeks and months now. Between the double red trend lines at the top and the double red trend lines at the bottom, we've seen rises and falls within that channel. Probably most important to note here is that we've now seen the market push through the top side. You know, we've looked at the double red trend lines at the top as kind of a range or zone of resistance within the channel, because we saw the first time the market squeezing into it before falling, second time squeezed into it before falling. This time, instead of just squeezing into it and falling, we've squeezed into it and now pushed above it. So this is very interesting, a little bit of a different market behavior than the last two times, challenging into this resistance level. We're now also above the 100 period moving average, which we haven't been for quite a long time here for this currency pair. So definitely some things to take note of is that we're at the highest peak highs of the current short-term trend, but we're making progress outside of our long-term downward facing trend channel that we've been studying. Zoom it in a couple of times here, you can see the market again above those two trend lines, above the moving average. It's in an uptrend. We're in a little period of congestion here. Last week during the trade room, I drew in a little box here to tell us that this was going to be an area of congestion. Let's just make it a little black box here on the chart. Just change the color here and draw it as a background. And so you can see that black box. So right now, that's showing us our period of congestion. If we're going to trade the franc right now at the very highest peak high of the current uptrend that we've been in along this blue trend line, when I'm talking about an uptrend, I'm looking along this blue trend line. So clearly, we're very close to the highest peak highs of that blue trend line. The best opportunities to trade it are going to be dips into support. Well, right now, as we can see for the past 3 days, the support is the purple shaded area. So as we're looking for opportunities to go long, if we're looking for opportunities to go long, it will be as deep as possible inside that black box towards the purple shaded area. That's 98.85, 98.60. Why? Because that provides lower risk and higher potential reward. The closer you are to the green shaded area, there's potential resistance, and your reward, your potential profit, is very limited. So if you want higher reward and lower risk, or low risk, high reward, you're looking for it to dip to the purple zone, maybe possibly even the orange shaded area, before you look for an opportunity to go long. The next thing you're looking for, if it doesn't make the dip, would be the breakout above the green zone, which is likely above the 99.50 level, top of the green shaded area. Green zone is 99.50, 99.20. So at least right now for this first part of the week, we're looking for buys still in the direction of the trend, but it needs to dip a little bit down here into the mid 9800s before it becomes an opportunity to go long or break above the green zone. No real evidence or need to go short right now on the US franc. Take it over to the euro dollar. Very similar, yet opposite. Everything's opposite here on the euro dollar from the US franc right now. We have the longer term uptrend. That's important to note because obviously it's been going up for quite a long time. Just one quick peek at the weekly time frame, we can see long-term downtrend. We've been inside this red box range for quite a long time. We note this all the time in the trade room. Nothing really new here for anybody that's been in the trade room, but that's important to note. Why do I make note of that red box? Because you come back to the daily, we've been at the top and come off the top of that red box. So that's important to note along that right-hand side blue trend line. Important that we are touching down here close to the red trend line. 100 period moving average also coming into play right along that red trend line. Zooming in a couple of times here on the daily time frame. Let's go in one more time. You can see the fall. We highlighted somewhat of a pattern within this trend, very similar to what we just looked at opposite on the US franc. The fall, the congestion, the red box, the fall, support around the green box, the fall, the congestion around the blue box. So very similar to the franc, yet opposite. If we're looking to go short in the direction of our current trend, which is the blue trend line, we're looking to go short, likely into resistance, close to the yellow zone, 112.25, 112.55. We know what the risk is. The risk is it breaks above the yellow zone and goes higher. So if we're looking to go short in the direction of the current downtrend, the yellow zone. And the closer you get to the pink zone, the risk of support is there. We obviously have seen that 1, 2, 3 days now in a row. Pink zone has held as support. That's 111.90 down to 111.65. If we're going to see the market go lower, it will be imperative for it to break the pink zone, maybe the 100 period moving average, and maybe that red trend line there before we can look for it to go lower below 1165 down towards the 11100 level. So at least at this point for the day today, I think we're selling in the direction of the trend on rallies to the yellow zone, breaks of the pink zone, and we look for it to continue lower. The only real reason I think we start to look for an opportunity to go long on this pair is if it starts to break back above the blue trend line, yellow shaded area. That may provide some clues to reversal for the euro dollar. Next, moving over to the GBP USD, Great British Pound versus the US dollar. Now, we have some news out of the UK this week that could change everything that we're saying with some GDP data and whatnot, but definitely watching this currency pair for some directional purpose. If we're going to follow the U.S. dollar, if you look at the franc upside, the euro dollar downside that we've been seeing on those two pairs, the U.S. dollar has had some strength over the past couple of weeks. So if that's the case, if we're going to see that continue to push through here on the GBP USD, we look for opportunities to go short. Now, we have done that over the past few weeks, had opportunities to go short, some profit, a little bit of a loss, some profit. You know, it's been back and forth here for this currency pair. If you were here on late last week in the live trade room, you'll note that we took shorts up here at the 4,600 level into the pink shaded area. So if you followed along last week, we took shorts at the pink zone. Profit was made down into the low 45 level. If you stuck with it over the weekend, even more profit as it came down here into the upper 44. So if you sold it at the pink zone, profit made. I've already actually closed the trade here on the pound dollar with profit, so I'm out at the current moment. So obviously the orange shaded area, rough 45.15, 45.40 is our resistance right now, just like it was back here on the left-hand side. As long as it's underneath there, we look for the potential of it continuing down towards the blue shaded area. Again, watching news this week. The risk in that scenario is that it breaks back above the orange shaded area. Take it down to the 4-hour time frame, because now we can see it has pushed underneath that orange shaded area. Let me zoom it out a little bit. It has pushed out underneath that orange shaded area, and the risk now is that it breaks back above it. So if you're looking for an opportunity to go short, look for it to stay underneath the 45.15 or so level, maybe 4,500, but closer to 45.15 is that orange shaded area, targeting lower levels, similar to what you would have expected to be doing back here. Let me get, that's not the line I wanted to move. I want to grab that little red circle back here, make it bigger so you can really see it. Right there where the red circle is, we were looking at opportunities to go short there at the red circle. We did it and made profit down to the blue zone. So that's a similar thing that we're likely going to be doing here this first part of the week until something changes, maybe later on this week with some news out of the UK. Moving on to the USD CAD, the US dollar versus Canadian dollar. The upside has been in play here for several days now. We can see the downtrend underneath the red trend line, uptrend above the blue trend line. We've seen a shift in the pattern of the trend. We've spoken about that in the trade room quite a bit over the past few days, the shift in the pattern of the trend. However, with that shift, we want to wait for the right opportunity to get into the trade. I mean, we don't want to just jump into it and expect it to go up, because right now, obviously, we're at the highest peak high. Let's zoom it in a couple of times. We're at the highest peak high of the upward trend, aren't we? Very close to it. 131.60 or so is the highest peak high. It'd be very difficult for me to say buy it right now because we're at the highest high. We're at our potential profit. You think about risk reward for a moment. Risk reward means that you're looking for low risk, small stop losses, and high potential reward. Well, right now, for the past 3 days, the potential profit has been capped at the yellow shaded area. So what I would expect is if we're looking to go long, we actually want this to go down first before we would go long to get away from our resistance level. Kind of like what happened here in this blue box where it hit the resistance, fell back to the orange zone, gave you a better opportunity to go long at the orange zone before going back up. So I would actually like to see this take a little bit of a dip back down towards the 3,000 level before we have an opportunity to go long. Keeping an eye on oil prices is always important as well here for this currency pair. So if oil prices start to fall significantly, at any point from resistance highs that they've been at, then we look for the U.S. CAD to go up. If oil prices continue to go or reverse and go down, then we could look for this to continue to pressure through the resistance. But right now, very difficult to suggest a buy because we're at the highest peak high. No real reason to go short, but can't really suggest going long yet here on the US CAD. Moving over to the USD JPY. Now this one's very interesting for the day today because we are at support on top of the red trend line. Now that's very interesting. Take a look. The long-term red trend line, we were underneath it. Over the past couple of weeks, we've seen a shift in the trend pattern where it was a downtrend. Now we're starting to see some upward trend movement. Zoom it in a couple of times here on the daily time frame. You again can see that the shift in the pattern has happened. We're seeing this blue trend line. We see this blue box, kind of a range or period of congestion. It pushed through it over the past couple of days and now settled back on top of it as support. So right here in the mid 109s is a very interesting area, potentially an opportunity to go long here for the US yen today, even here into the mid 109s. 109.50 becomes an opportunity. We're on top of this resistance, now acting as support. We saw it back here. Look at the black box right back here where we saw it push through, settle down on top, and then a significant rally. So I would suspect that today this may be your closest opportunity, buying right around 109.50, targeting the next resistance level, which is right up here towards the 110.65 level, the blue shaded area up here. Your risk, of course, in this scenario is that it continues to break down through 109.35 or so and heads on back down here towards this orange shaded area, which would be your next area of support, obviously from back here. So at least at this point, it looks more likely a buy scenario for the day today into the purple shaded area for the US yen. Your risk, of course, like I said, is going to be underneath it. You're going to want to place your stop close to or just down there right around the 109 or just above 109 here for the US yen today. Moving on over to the AUD/USD, we're kind of stuck in a little period of congestion again. It's a downtrend. Nobody's been arguing with that one for a while now. We do have some news out of Australia that we'll want to pay attention to this week. Could be a game changer or not, and we'll have to wait and see how that news is disseminated by the market. But definitely watching this one in the downside is clearly been moving lower here for the Australian dollar. Zoom it in a couple of times. So if we're going to look to go short, we always want to go short at a resistance level. We never want to go short at a support level. So at least at this point, I think we're kind of stuck in a period of congestion again, similar to some other pairs that we've been looking at. Let's look at this area right here inside this black box. Yellow shaded area, 72.45, 72.65. So if we're going to go short, it makes much more sense to wait for it to go back up to the yellow zone and the blue trend line before we would look for an opportunity to go short. Your risk here in that stance is that it breaks back above the yellow zone and goes back up again. So if you're looking for low risk and high reward to go short, at least coming back up to the yellow zone, your risk is above it, and you look for it to head back down towards the orange shaded area, which is our ultimate low here right now for this currency pair. Anything underneath there, we look for it to potentially go lower here for the Australian dollar. Let's take it on down to the 4-hour time frame. Now that we've seen all that, squeeze it out like this. And again, if you go short, you might already be short because it's already taken a rally into that yellow zone. If you did, your risk was above the yellow shaded area because we know that if it breaks above, it goes higher. So it's definitely something that you want to make note of. You're targeting the orange shaded area. Nothing really different there as we get down here to the 4-hour time frame. And really, at this point, you're looking for the breakdown of the orange zone and the continuation lower. But right now, we're smack in the middle between the orange and the yellow zone. Not an opportunity unless it makes some either rally higher to the yellow zone or dip down towards the orange zone for the Australian dollar today. Moving on to the NZD/USD, New Zealand dollar versus the US dollar. We're in congestion again. This one's been kind of a difficult pair over the past few days because it's in a really significant consolidation or congestion period here for this currency pair. It does that a lot here on the New Zealand dollar. It goes into congestion before going trending, and you can see those periods here on the chart all over it where it goes congestion, bounces around, and then eventually moves in a particular direction. Well, at least at this point, let's go ahead and zoom it in. I would say that this is our congestion area right now. And let's just kind of take a black box, put it in here like this, and we can see it's kind of bouncing around in here for several days. This is a couple of weeks now worth of time just bouncing around in here. So if you're going to go short, what's the most obvious opportunity? Back up here at the top, close to 68.20, 68.40. Or the next thing, which we thought we had last week, The next thing we'd look for would be the breakdown of the pink shaded area. So one of those two things are the next things we're going to look for. In fact, I might even bring this down now, the bottom of the pink zone, closer towards the bottom of this area. Let me see if I move this out of the way. Let's pull this down to about right here. Let's call it 67.35 or so. So let's bring that down like that. We'll bring the top, well, I want to leave the top where it is. 67.65 down to 35 is the pink zone now. So it needs to either break down 67.35 or go back up to the top before we would look for it to continue the downward pressure that we've seen over the past several weeks here for the New Zealand dollar. No real reason fundamentally to go long here on this currency pair. Everything points to going short, but it just has had a difficult time continuing to break down through that pink shaded area over the past several weeks. So definitely watching for rallies into resistance and a new opportunity to go short. We know what the risk is. The risk is a break above the mid 68, 68.70 or so. If it gets above that blue zone, we'll likely look for it to begin heading back higher again for the New Zealand dollar. But for the time being, I think going short back up into the mid to low 6,800s will be our next opportunity here for the New Zealand dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.